Good morning, everyone, and thank you for coming along today. I'm conscious time is of the essence, so I'm going to rattle through this fairly quickly, but I know it is available on the website. I spend all of my time working with the energy industry around the world, particularly with boards and executives. And what I wanted to do today was just to build on what David and Adam have told us, and perhaps look at that in a wider context. And particularly this question that David posed there at the end around the public perception of the industry. I think this industry, along with others, faces a very challenging time, not for the reasons necessarily that the deep experts have told us, but some wider reasons. And let me just set a bit of context. I think the private sector is absolutely essential. More and more I see this as not only in the UK, but as I go around the world. Your investment in talent, in research and development, innovation, and your sheer competency on getting energy into our homes and into our factories, etc. Absolutely essential. And yet trust in the private sector, and indeed the public sector, no one's immune, is at one of its lowest times. And that offers a real challenge in terms of having investors, regulators, staff, and others confident in you and in all of us. And that's what I want to talk about, that confidence that is essential for the growth and for the ability to achieve the potential that Adam showed in some of those numbers there. And I'll just say a few things. What we hear in every industry is the potential is huge, but so is the uncertainty whether that potential will be realized in terms of economic return, in terms of timing. The scale on which we're now talking is huge. Not just in the UK CS, but also around the world. And yet, I think as we've all seen, there is a huge fragility as well. Any single crisis can immediately have some very significant impacts on an industry's ability to operate as it planned. And thirdly, there's a real dominance of big organizations, more and more power, more and more capital. And yet, increasingly, I think as we've seen through other industries, a real awareness that there is a massive dependency on a very fragmented supply chain in order for those big organizations to operate. I'd like you just to hold those three thoughts as I go through a few of these slides, and I will take some of them very quickly in essence of time. So I'm going to talk just quickly around the trust and why it's critical for survival and growth, and why that trust is actually, as we're seeing, has been eroded and needs to be rebuilt. And that's for industries perhaps that have a higher profile than your own, but you have some of the same challenges. I will touch on some 3 features of new operating models that industries are taking, your own and others, that I hope sharing those experiences will be useful for you. And also then just finalizing on your individual and collective responsibility. So trust is critical. And it's more. You won't just earn trust by doing what you've always done well. You have to work a lot harder than that. And I do a lot of work with investors. And I will pause on just 2 points on this diagram. Trust in the leadership. The investors that we work with, the regulators and others, continuously will be challenging the quality of leadership at the top of organizations, but also at heads of division and heads of main operating units. That challenge is going deeper than ever before in light of some of the failures that we've seen in corporate governance. That trust in the leadership is the basic right of entry. At that point, money can flow, licenses will be given, talent can be obtained, and your supply chain will work with you. But that's only the beginning, because that next line up is the most important one of all, and I cannot emphasize it enough. Do what you said you would. That's what everybody asks. Every investor I work with in the energy and extractives industry, just do what you said you would. And if you can't do what you said you would, please tell us what you'll do. Please tell us in time if you're going to fall short. That is the most fundamental message. But it's not just about investors. all of us are creating more and more expectations to more and more stakeholders. So when I said, do what you said you would, one of our challenges is we're saying more and more about what we're going to do, creating more and more risk of falling short. And those shareholders, investors, aren't operating in isolation. They hear the noise. They hear the conversations through all those other stakeholders. And they are worried. That potential, they can see the numbers. And I'm not talking just about UKCS here, but they see the numbers. And they're worried whether those numbers will actually be realized in the timeframes that are being given. And the others are helping them with that uncertainty. This is a report that we prepared. You can see it's a couple of years old now, but I think there's just a couple of messages I want to pull out of it very quickly. A simple 4-box model, because that's what we tend to prefer. And in terms of just the messages there, if you look at that 14%, that's where there's been so much focus when we look at this question of risk. And I want to bring us to this question of risk. Because when you look at the other numbers there, this study was looking at what is causing corporate performance to fail, promises not to be met. And when we look there at those top 2 boxes, operational risk categories, some of those, again, that Adam and David have talked about, is one of the main factors. Almost 30% is down to operational under-delivery. And the other one, which is probably newer on the table, those strategic risks, the investment in R&D, how much do we spend? For yourselves, the investment around new exploration. When we look at integration and challenges working in partnerships with the supply chain, strategic risks are areas generally that have had a much lower focus from all management teams right up to board level. And yet you're looking at almost 70% of the reasons of poor performance originate from those risk categories. This one I'm just going to show very quickly, and sorry, that bottom axis should have had time on it. I think it's just fallen off the graph. But this is, again, a study that we've done with Tomorrow's Company that's looking at corporate governance, and this, again, has been a core reason why trust has been undermined in all industries. And I should say, I keep emphasizing this is in all industries, not in this industry alone. Classic crises, actually people recognize that we encounter. And you can see from a time point of view, they have a sharp peak, but then they tend to get managed again and be brought under control. This category from our studies is showing a much more significant impact than perhaps we appreciated, or indeed others who we worked with on this. The rail industry is a great example. Routine, everyday maintenance problems caused little operational disruptions. They were below the radar. But then what is the trigger point that says we're into something more significant? Those are ones that people expect management of organizations to see and to act upon in a timely way. And generally, the investors will say that the recognition, the trigger point, is not being properly appreciated from these everyday occurrences. And the yellow line, which I hope you can see all right in the colors, strategic disruption, it comes to this question of strategic risks. So strategic disruption creeps upon us more slowly, but this is, an example is investment in R&D and innovation as a massive issue, is that you don't realize just how much some of those budgets get eroded, and then an organization or a sector is not in a strong position to respond. And you can see, importantly, with strategic disruption, the continuing level of impact remains high. And the fourth and final one of the crises types that we looked into is the hidden crisis. And this is another one which has really perturbed the investors, the regulators, and others, which is these are crises which are hidden to the outside world but are actually known by management. And these, as you can see, have an equal impact, but the problem is it is unexpected. So this simple analogy of crises is showing this is what particularly investors, but also others, are really concerned about and have to be avoided. But it can show that risk is actually something which can be managed to advantage. This is a study that Knight and Pretty did that we have since used and worked with them further in looking into this. But when companies struggle, and organizations struggle, there is a period of time, quite short, which is about a 60-day window, which will determine whether or not they will come out of that underperformance or crisis time well. An example of an organization, and I'm staying out of sector quite deliberately, in terms of an organization on that bottom line of underperformers is Northern Rock. Northern Rock had a period when it could have recovered, but its whole approach to its issues meant it stayed below the line. There are many other examples, including in this sector. But there are those that come above the line, and some of the consumer products companies have achieved this well when there have been product issues, as have pharmaceutical companies. And after that short period of time, they find their feet and they recover. And the important thing you can see there is, again, the leadership and the communication has been a big part in enabling the recovery. So risk is not a bad thing. We all live with it, and indeed we make money out of risk. But it's something where I think there's a real challenge whether the leadership is competent and whether or not people believe, again, you can say you do what you said you would because the risk is so complicated. I know I scampered that fairly quickly, but I just wanted to get on to 3 features of the operating model and the way organizations are starting to work. And I'm not offering a view whether you are yet up with the best or whether you're really at the early stages, but just to take these as reflections, which I hope are useful. And I underline the word leadership. I can't emphasize it enough. I could stand up here for a long time and talk about the strengths of leadership and how people are starting to scrutinize that in more detail. But let it be said that that word accountability is critical. Accountability to the stakeholders, which in the end will determine whether or not you get the confidence you need to grow. And the 3 features, quite simply, are words which I will come on to the next slide. Working as part of an ecosystem, none of us are alone. The quality of decision-making and the openness of communication. They look quite simple when they're up there, but actually they're hugely complicated when you get into a business. So let me just quickly explore those. And in terms of just that first one around the ecosystem, let me give you an example from the consumer industry and the retail industry, which I hope draws parallels back for yourselves. Anyone within Primark, after the factory fires, the factory collapses that we all heard about, but also anyone who's in any of the issues with the supply chain pressures and Tesco's and the other major retailers with the horse meat issue. All of them realized just how much they had to really understand their supply chain, but not only understand their supply chain and who was in it, but also to determine what was the appropriate level of governance that they should exercise over that supply chain. How much should they spend on controlling their suppliers, changing their suppliers? And this isn't, let me just say, this isn't just the first-line suppliers that you hear about on the news of the factories, etc. But with those factory incidents that happened, all businesses that supplied things like buttons and zips, most of those have now gone out of business because they were supplying into those factories. They were smaller scale businesses. With the horse meat scandal, the businesses that have gone out of business aren't the people that you hear about on the news so much. They're the transport companies and some of the processing companies. The ripple effect is immense. But for organizations at the top of the chain, it's crucial to understand what your behavior will be towards understanding your supply chain. The second category around decision-making, and I suppose I couldn't go through a whole conversation about trust and confidence without referring to financial services a bit further. But this is around decision-making, and decision-making around what level of risk you're prepared to take, and decisions whether you're happy that your mitigations to that are effective. And going back to that, I'm not talking about the detailed technical risks that many of you guys confront, but this is actually around the totality of that 4-box model that I talked about. Understanding the risks and the needs of your stakeholders. And financial services, I was with a client at the back end of last week, which is very telling. It is one of those of many that have been in all the headlines. And they have determined now that their whole business has got so risk adverse that they're no longer developing new products and taking them to market unless they're absolutely cast iron to be in line with regulation. The question is, that might be a very nice short-term decision, but what will it mean in terms of their customer base, their returns, their ability to make money, which for all of us will affect our long-term investment and the return on investment that all of us see. Our financial services has to walk a very fine line between the level of risk it takes and the level of risk which is just too much. And it is very hard for anyone to make those long-term decisions. And the third one around openness, and I think this relates to something that David mentioned there towards the end of his presentation, around just how well is this industry known. But this openness is something that comes right back to what I said at the beginning, which is do what you said you would. You have to explain what you're going to do. You have to explain where you stand against achieving it. And indeed, if the risks are meaning that you are unlikely to achieve it, you have to explain that too. And the mining industry, I think, draws very strong parallels for me with this industry in terms of its ability to be able to deliver its annual mine plans, its extraction rates, its operating costs, and whether or not any of those are sliding the wrong way. So there's immense pressures on all industries, and I simply just use these examples to show you that you're not alone. Every industry is struggling with the same challenges. So finally, I'm just going to draw it, and just to talk about just a final slide around the individual and collective responsibilities. That question, do what you said you would do, make good decisions, and tell people about it is absolutely critical. And you could do that alone, but we're seeing in most industries that companies work much better when they don't do it fully alone. Some of this is a competitive issue, but a big part of it is to enable a sector to grow, and from that point of view, working as a collective is powerful. So there's 6 points I leave up here, and in terms of just setting them out, I put them into 2 camps. Those who are actually working as an industry will bring strength. The strategic response of this industry, what is your purpose? And something David said to me, I think, was I see around the world, which is UK oil and gas doesn't have anywhere near the profile of other sectors, your equivalent sectors in other parts of the world within the UK. What is our purpose? What is our direction? What is our approach? We talk about that with organizations, but we also talk about it with sectors. Your ecosystem network, what I referred to as your supply chain, what are the critical relationships, the value you bring to them, the value they bring to you? It is a fundamental that you have to understand, because those are the dependencies. And also the ability to convene with those parties. None of us have a garden fence anymore. All of us are part of a world chain. And the final one, which is also a point David conveniently mentioned around there, the right information. As an industry, you have to be communicating consistent and comparable information that is absolutely relevant to those members of the ecosystem that you depend on, including your investors. If any of you do that alone, it will be good, but it will lose a lot of its power. And I think there is a very big question in all industries about whether the right information is getting to the right audiences at the right time. You might be able to predict what's coming in the bottom box there, but then you have to do things yourselves. As a sector, you can set the frame. But this is actually the self-accountability to deliver what you have promised. Your decision-making. And I keep coming back to that because you guys are at the front line. You and you alone know what's possible in your operations, and everybody implicitly has to trust you to get that right. But your decision-making must understand the level of risk and the level of expectation that is now upon you and the complexity of that. You have to deliver. You have to do that as individual organizations. Secure, competent, agile to deal with change, collaborative to work with others. And finally, that point on openness. Each of you must create your dialogues, have your dialogues. It has to be dynamic. It's not a compliance requirement. And more than anything, it has to be honest. So I'm just going to close there But your growth and your ability to achieve what Adam and David have set out, and perhaps turn some of those graphs the other way that they need to, perhaps understand the reasons for them, will require you to operate, I believe, in a way where you look at your decision making. Again, you look at your dependencies and how you work with your supply chain. And you really work hard at the information that you have as an industry and how you use that yourselves and how you share that with others. Then they will trust you further, and then you'll get that further investment and that further support for the growth that we all know is there. I hope that's been useful and offered an insight, perhaps setting the wider frame. And thank you for your time.
Thank you very much, Tina. Thank you very much, Tina. That was very thought-provoking, I thought, and I'm sure it's going to give rise to comments and questions from the audience. We are now going to take our networking break. We will then come back for the panel session, please, at 9 o'clock prompt, and the panel will then be joined by Una Werngren, Operations Director of Oil and Gas UK. So if you've got those questions ready, please hand them in. If not, scribble them down in this break, hand them to a member of staff. There's also a feedback form on your tables. Can you please fill those in? Your honest comments upon today's events are hugely important to us in planning our future events here. So that would be very good too if you could look at that. Thank you very much indeed. See you at 9 o'clock.